Okay, anybody that's, I said, I think we're going to hit into the 61 just to knock out these stops. A reminder, if you want to go in a direction, the best way to do it is to be hitting the resistance zone rather than trying to hit close to your target, because there's much better odds for risk reward. So this smoking bar right here, I said, oh, I guess the fix is in. We're looking at the 5, remember? And we said this should be, obviously, with this kind of a bar, I guess the fix is in. Everybody wants the long side. And then it sits here. And in the past, you know, they don't give us the dribble backwards if they want to squeeze us. If they want to squeeze us, they're going to hold on and just keep going. So this failure right in here, once we get into the 66 to 65, you know, we said use your 68.5 to 69 zone. Yesterday's resistance, today's demon. Use that. And if you do, expect if we got to 66, 65, peel it out. Any more is good fortune. When they come down into the low here, you know, this tells us they're using the whole bar. So if you short that bounce, hopefully once we start down this road, the goal is to knock out this low. Because I believe that this is the way it works. They try to create new trades. They want to bust stops. That's how they get paid. That's how they get commissions. So the 30-minute chart has been working. Still is. And this type of a trade that fails up in here, you've got to smell it. You've got to say, okay, these guys, the fix is in. We're still range trading, the 60s. We still haven't broken out of it. So, you know, the marginal low type idea is the first thing. In this bar right here, once we get the higher low idea and the resistance zone from up top, you know, all you want to do is think about, hey, can I get back to the 62 zone? Get the 65s, rotation is here, and then expect this last bar right here. If we get back under the black, the blue line here, this black bar says, okay, we got you now. It's a contra bar to this one. And still range type trading. But this is the way they do it. Gotcha. And then failure. So whenever you get the retest failure like this, then come back and look at your next derivative, your 10-minute chart. Keep an eye up here on the green line, because that's going to be in play. I think today the boys were masters of deception. This trade we smelled. This trade, you got to figure, is coming into that 66, 67, and then obviously, okay, the push. Because this is a 5-minute bar. They get 5 points. That's a strong bar. So a strong bar shouldn't give up its middle. And when it does, it tells you it's weaker. Nice trade. Anybody that got back into our primary target, which is 62, great trade. And I'm going to put on the 10-minute chart and suggest you keep an eye on that. And a reminder, this guy right here has been the support. Until that goes, shorts are still on the hook. So a 10-minute variety is pretty important right now. And we still have theta burn. So this is the deepest pullback that we have had since that egregious day on Friday. And this tells us two things. First, this day was just, you know, a wash type day, and if you average in yesterday's ideas and today's, we still don't even have a 10-point range yet. So let's not get overconfident in either direction. And we'll see what happens later. Great trade. You guys that took, you know, the 68, 67 short. It's a great trade. We said hit the bounces, but don't think they're going to go anywhere. And then this one bar is the smoking bar. So we've got some, like I said, you know, we had the short strap. They let them off the hook. Equal opportunity employer. Now they've got the long strap too. And again, I'm not reading into this anything more than it is. It's a a regression type trade. That's what it is. And we should get that after, you know, that big update. Don't forget, we had like a couple of days, 30-point days. Now in 2 days, we can't even get 10. Come on, give me a break.